I mean, we're brushing right up against recent resistance, and you guys started off the show talking about the reversal in the financials. Seems to be the market is more concerned with rates staying low and no Fed increase on those rates, and I've been consistent. I think that they're boxed into the corner here. They are unable to raise rates. That sends not an all clear sign, but it really makes equities definitely the target for a lot of these portfolio managers. They're shrugging off earnings misses and going right back into the equity market because it's the only game in town for now.
My read on both is that Goldman, given the nature of their business, it's very, very difficult to go quarter by quarter. I like it long term. I still think it's the premier franchise. There are very few pure plays left, Morgan Stanley being the other. So I still like quite a bit. The only caution would be right now, not for Goldman, but for the sector, is that the IPO calendar is apparently slowing down. And that's a good source of profit margin for them.
Right.
The market volatility that we saw in August definitely has slowed a little bit of IPO activity over the course of the last few weeks. We have seen a number of IPOs get done, although in the United States, for example, 10 out of 11 of the last IPOs in the last 3 weeks have priced below the range, and they've traded up just slightly. So investors are asking for a bigger discount to move forward right now in the IPO market, and that's leaving a number of deals to potentially wait till the market environment is a little bit more inviting.
There is one commonality across all those transactions, which is that they're quite a bit larger than the typical IPO, right? The typical IPO is a small cap product, and these are all, generally speaking, larger cap companies that typically withstand the IPO market swings a bit more and can push forward. And that's because it's more of an event for the buy side. Certainly something like First Data is a meaningful event for the buy side. Market's been tough. Market's been tough since August when we had a spike in volatility, and investor returns have not been there. But these companies decided to move forward because it's part of a process for them, right? And one of the other commonalities is they're largely primary transactions. Yep. The sponsors are not selling in some of these transactions. They're moving forward. It is a step, and they've chosen to move forward. Now, Albertson's a little bit unique, obviously, given the Walmart news, and that's something that nobody can prepare for. And so that certainly shook the market, but I think it's more about that than the broader market.
But we've seen